What's going on, everybody? This is Aaron Trevina here, back in the beautiful state of Texas on our Texas Real Estate and Construction channel. We are joined today by Justin Harrison from Southern California. He is with Futures Financial, and we're going to talk a bit about hard money, using hard money, what hard money lenders are thinking, and how you can use hard money to scale your business. Justin, I know this has been in the works for a bit, so I'm great to sit down with you, and honored for you to be here with us.
Pleasure, man. Pleasure. No, thanks for the invite, man. We've known each other for 2, 3 years now, on and off. But it's been great to officially, get on your. I've heard a lot about what you're building over here. So, hey, my pleasure to be a part of it, man. Thank you so much.
Yeah, I appreciate the kind words. It's crazy to think it's been that long, and really over the past few years, so much has changed, I'm sure, in our lives and the economy and real estate and all the above, right?
Oh yeah. I mean, what? Just backtracking, just 2 years. Yeah, 2020. I mean, the whole world was flipped on its, upside down. So yeah, and especially now with the market that we're kind of on that, in the pivot phase of the market cycle. I mean, you'll see a lot of things changing as well. So, if there's one thing that's constant is change, man. So, just pleasure to help as much as I can.
Yeah, no, and I think that's something we're definitely going to touch on is also that the thing that's constant is change, right? Really just change across the board. And one thing that's also changing is the way that people are viewing finances, and I find it to be really interesting. And you're obviously a finance guy, you're well versed on the industry. For those of us who aren't familiar with you, would you introduce yourself, please?
Yeah, my name is Justin Harrison, originally from Southern California. Um, Official title is technically senior account executive with Futures Financial. Been in the space, want to say about 6 years now, give or take. So, in the grand scheme of things, relatively new, but I've only been in this space, specifically the investment space within the real estate industry. So, I want to say I'm well versed in it, but you guys can be the judge of that.
Yeah, no, I got you. And I'm curious as well, maybe, could you talk a bit about, what, where you grew up and, growing up as a kid, did you see yourself working in real estate at all, or how did you get into the business?
Uh, Man, so long story short is this. Yeah, I grew up in Southern San Diego, born and raised for the most part. And real estate always interested me. I didn't really have any immediate family in real estate. Um, just like everybody else, that I was an athlete. I played Division I football. So like just like everybody else, you want to go pro in what you want to do, right? That didn't happen, obvious reasons, but real estate kind of found me in a sense. I was working with another industry in college, and this guy kind of introduced me to the finance side of real estate specifically. I was always good with numbers. I never really wanted to be an agent necessarily. So he introduced me to somebody else. I took a job, and the rest is history.
That's awesome. It's crazy. I'm probably going to butcher this as well, but it reminds me of those. You ever see those NCAA commercials? It says, our students are going to go pro in something other than sports.
Yeah,
You
no,
know,
I don't remember the exact quote, but yeah, you're right there.
yeah, I always think that's so cool. If you wouldn't mind, could you kind of explain, where you played football and what position?
Yeah, so I went to University of San Diego, in obviously in San Diego. Went in initially as an outside linebacker. I had a lot of injury. I got the injury bug. I never really had injuries growing up, so it didn't pencil out to exactly what we thought was going to happen, right? So at the end of the day, I wanted to help people, and I wanted to make as much money as possible, knowing that the NFL wasn't going to cut me any checks, right? So that's what kind of led me to this space, man, to be completely transparent.
Yeah, I like it. Obviously, sorry to hear about the injuries.
It's all
And
good.
and I think it's neat as well because I mean, mind you, I played in high school. I didn't play I didn't play at the collegiate level, but as an outside linebacker, you're having to be diligent and kind of you're scanning the field, you're looking around, and you're kind of taking the initiative in a way. And it sounds like you're kind of using those same lessons you learned on the field, maybe to what you're doing now.
Yeah. It's really, especially in my space, like I'm in the private hard money type of space, right? So since we're strictly dealing with investment properties and investors, brokers, wholesalers, etc., if there's one thing obviously is that there's a lot of moving parts. We try to make it as smooth as you can, but just like in sports, right? I mean, I had a coach that used to yell sudden change, like when something would happen, you have a fumble, interception, whatever, somebody gets hurt, you're up, whatever it may be, and just like investment properties, that appraisal comes back a little higher or lower than anticipated. Oh wait, your title rep was on vacation, so now like there's always little things that happen. So I think the ability to adapt and to change, while still maintaining the game plan from the beginning, is key to, I mean, to everybody's success in this process.
Yeah, absolutely. And it's crazy, when you really break it down, how many, different hands are touching a real estate deal, right? From you first picking up the deal, maybe you're flipping a home, maybe you're doing construction, you're dealing with title and appraiser, you're dealing with, the one who's funding it, right? Like there's so many moving parts, it's for someone for someone, maybe doing it for the first time or just doing it again, it can be a very daunting process for people.
Mm-hmm. Yeah, I mean, and I think it depends on which aspect, because you have your buy and hold, right? You have your traditional BRRRR, where you just buy it, renovate it, refinance it, right? And take the cash out, reallocate it toward another property. You have true fix and flippers, right? You have wholesale. Like everybody is plays a different part and has a different, some people do a little bit of everything, but especially when you're first starting out, there are a couple of things that you should definitely, be aware of. Don't be scared of, but just be cognizant of.
Yeah, absolutely. And that's the thing as well. Maybe the word hard money maybe sounds a bit intimidating, or using private money. Oh, it's not mine. So obviously someone is controlling that money. What do I
Yeah.
do? Right. So maybe for someone who's unfamiliar with it, could you describe exactly what hard money is and why it's important to use, when you're looking to scale your real estate business?
Yeah. Think of it like way back when hard money had it wasn't so great of a like connotation to it, right? To put it lightly. Nowadays it's almost, if you're not buying a house in cash, it's really it's almost necessary, man. Like, to be completely honest, like, it's think of it like a band-aid. Like all of my stuff is short term on the true hard money stuff, like a 12 to 18 month term, for example. That's, I think, it's pretty much industry standard right now anyway. But just think of it as a bandage. You're gonna pay a little bit more than you would if you went through a bank and you have, X amount of tax returns, you're qualifying based on DTI, et cetera. With I I'm not just, referring strictly to my company, but just in general, it really comes down to, like, do you have enough cash in the bank to cover your out of pocket and your reserves? If so, cool, let's close this thing in like within 2 weeks, keep it simple.
Yeah, no, and that's a great thing to do. And maybe some, I don't know if you call it an objection, but just some point that someone would make is, why would I even entertain the private money side, when I could just go to a normal bank?
Some of it has to do with what you're looking at, right? Like if you're looking at a true, if let's put it like, we use the term bankable. Like if you have X amount of tax returns, you qualify on paper, and you just want to buy a property and just sit on it for X amount of time, cool. But as soon as that renovation factor comes in, or you buy a distressed asset, the majority of banks don't want to touch that. So that's where, people in the hard money space come in, where you lend X amount on the acquisition and then you wrap up about 100% typically of the rehab as well. So then that person can then draw from those funds. And then if their exit is to go long term, cool. Then, it doesn't matter. We're just here to bridge, literally it's called a bridge loan, to, help you at least get into the property, fix it up, and then how you exit is essentially up to you.
Yeah, absolutely. And I think also maybe, maybe part of it is also knowing that the person, that you're talking to on the other end of the phone is also kind of speaking the same language as you, right? So they understand I'm an investor, I'm a builder, I'm a developer, I have my own objective to do. And Justin knows exactly what I want to do, and he's going to help me do it.
Yeah, man. I mean, the biggest thing is, like, I ask everybody up front anyway, like, what's your game plan? Like, what's the objective here? Because the last thing you want to do is get stuck in a deal. Um, Understand that you need to know your overhead costs, and which is something that basically, which is your monthly payment, and in other words, and know and anticipate how long it's going to take you to get this project done. And then when you're first starting out, know that your pricing was fluctuate. You're not going to get the same pricing as you would once you get up to 5, 10, 20, whatever properties, right? Which is one thing because you have to hedge risk from a lending side. And honestly, like to your point, as far as when you're first starting out, don't be afraid to partner with somebody. Like
Hmm.
partner with somebody who has that experience and who's well versed in the space, and then get with somebody like yourself or like with us from a lending side. Like just make sure you know there's a lot of people in this space who say they know what they're talking about, but you know till you get down to it, you never really find out. But make sure you have the game plan up front, have your contractors lined up because that's the true make or break. I'm sure you know about Aaron. Like you could have a great property. I've seen it 1,000 times. Contractor was questionable to maybe begin with. No offense to contractors, just putting it all out there. And they walked away mid project, and then this person was stuck with it. They still have to make their payments, but by the time they sell it, they're not nearly making. They're either breaking even or not making nearly as much as they initially thought they would.
Yeah, and that can always hurt too. And I guess maybe that's another story as well, kind of not only identifying the deal, but also building a team that can help you accomplish your mission.
100%. Yeah, yeah. Your team is everything. That's what makes you successful.
Yeah, completely. And one word you mentioned that was interesting before was the word experience, right? So maybe someone, whether they're doing a deal for the first time, maybe they're flipping a home, they're building a home for the first time, or maybe they have a few under their belt. One question I get is, hey, I've basically kind of partnered on or helped out on, flipping a home, and now this new construction lender, he's not going to count that as experience. Is there any way to kind of, I guess, kind of coach people up to where they won't have to deal with that? So, on paper, they show, hey, I have this experience to be able to do these sorts of deals.
Um, as far as becoming the sponsor, the primary guarantor on the new ground up construction that they're looking to so like ourselves and a lot of lenders, ground up construction is a whole nother monster, right? Then I mean everything has its own issues and its own benefits, right? The value add to ground up construction is that literally instead of like a fix and flip where you basically depreciating the asset when you tear it down and you add value back, ground up every like nail you put in is a value add to the property, right? But nonetheless, you really don't know what you don't know. And especially on ground up construction, you should have somebody who is a member on the entity, right? That so that they have some sort of vested interest in the project as well. Uh, Help you build that from the ground up, and then once you have that, and you feel comfortable going on your own. Cool, do that. But it's all about risk mitigation at the end of the day, especially on the ground up projects, especially depending on what state you're in. Like Texas definitely has the laws on building are definitely a little bit more lax than like in California, for example, when it comes down to permitting process and whatnot. But you still need to know what you're doing.
Yeah, completely. And I think that's a great, that's some great insight there. So thank you for that one. And one word you mentioned there was the word risk, right? So I guess, whether you're dealing with, insurance companies are mitigating risk, and then lenders, they're mitigating their risk, right? And one maybe issue some people may have with lenders is saying, well, the lender has all the money. Me as a borrower, I'm taking on all the risk, but it almost kind of seems like people are forgetting that your lender is also in the same boat with you.
Yeah, I mean, when you look at it, like, and I'm gonna but like this is what I always tell people as well. Like, would you lend money to somebody that you've never met before? We all know people like in real life in our personal lives that we have no problem lending money to. They're going to pay you back. We also have people that not a chance that we're going to give them any money because we know it's not coming back. So lending is basically it's the same. It's a trust factor, but in the very beginning, you have to check certain boxes to make sure that that you're going to repay. I'm not lending money to foreclose on the property. I'm not lending money for you to fail. Like we all make money at the end of the day. We make it on the origination on the monthly payments. You make the large chunk on the sale or on the refi or the appreciation of the asset. So it is a team sport, but we have to mitigate our risk just like you have to do from a buyer side as well.
Yeah, absolutely. And that's a great point as well. Really just kind of realizing that, your lender, if anything, they want to see you succeed because if anything, they want you to be a rock star and come back for more business, right?
100%, man. 100%. We don't want to do one and done. We want to repeat clientele, and we want you guys to be successful in the long run. You eventually get to the point you don't need us. You're buying these cash if that's your end goal. I don't whatever works for you. I just want to be an asset.
Yeah, yeah, absolutely. And in terms of being an asset as well, I know you kind of talked a bit about, kind of the old way of thinking about hard money. Could you maybe talk a bit about, misconceptions or maybe wrong ideas that people have about the hard money business?
Yeah, that it's expensive. Is what some people was what that's the general overview of it is that it's expensive and that it's not always necessary. That's what a lot of people say. I don't want to dive too deep into all of the because hard money has changed so much over the year,
Mhm.
right? Like before it was just here's a property, here's the money, here's X amount of the property, right? Or some people wait a couple of years ago were even doing 100% financing. They were taking their proceeds on the exit, so they were giving 100% up front, taking the proceeds on the exit, but somebody's paying X amount of interest rate, call it 12 to 15%, but it's added risk on the lender because you're literally fronting all the money. So there are there's some risk in that because they're saying it's too expensive, but it all boils back to okay, well, make sure you have your carrying costs down, and you're mitigating your risk so you're not over leveraged when it comes to actually exit from that initial loan.
Absolutely. Great insight there. And, another question that people may have as well, I'm sure, you hear it time and time again, requirements, right? What do you require? I'm sure every
Yeah,
lender is different, but just maybe if you could just kind of generally tell us, what makes I guess what makes a lender want to lend someone money for a deal?
yeah. So if we're just generally speaking, right? Like I'm not speaking for I'm speaking for myself. I can't speak for everybody, but we look at 2 months of bank statement. So you need enough liquidity, right? Like I know there's a small group of people that are saying you can get with no money down, but in all actuality, you need at least some sort of capital, right? So we're looking enough for your out of pocket, your closing costs, and your reserves. We're looking for a flat dollar amount, right? You do need to have decent credit. We credits decent credit or good credit is not necessarily required, but it is going to make your cost of capital be a little bit less, right? You're going to put a little bit less money down. Your interest is going to be a little bit lower because all it boils back to risk mitigation. Um, we require LLCs to close. Some lenders don't. We do. So make sure that we don't require seasoning on them, but just make sure that at least in process by the time your deal gets to underwriting, so you have your EIN registered. Um, let's see here. I mean, it just depends. If it's a purchase, obviously purchase contract, we need a rehab budget. If you're a first time investor, we need a contractor who's licensed. I know some states are up and down of actual licensing requirements, but we need to have somebody on board with you. Um, I mean, and that's the nuts and bolts of it. Everything else kind of and driver's license, but everything else is case by case. But that's just the general stuff, and there's not too much outside of that.
Yeah, yeah, absolutely. And great insight there as well. And I'm curious, one thing that people may have in their minds is, really, I guess, with real estate or anything that's new for you, is kind of that sense of imposter syndrome, right? Maybe I flipped homes. Who am I to think I can build now? Or,
Mm.
maybe I'm sitting on some cash. I don't know what to do with it. Who am I to think that I can go out and build and develop? What would you say to someone who kind of maybe has that sense of imposter syndrome, but they're looking to utilize hard money?
As a first time investor or somebody who's flipped homes and now they want to get into the ground up space specifically. I mean, if you flipped a house before, like it's the same people like they look at a house, they're like, I don't like some people don't even know how to change a light bulb. So it's like if they go back to the imposter syndrome, like you flipped this house already or you did a value add on this said property. You already started that process. Now the ground up is just that extra phase. It's like, oh, okay, well, I ran a mile, now can you run 2 miles? Like it's just to me it's the same type of mindset. But once again it just comes down to building that team around you. You need a slightly different team. You need more architects. You need it's a slightly different team, but nonetheless, you still have to build the team same way you did when you initially flipped that property or when you initially bought your long-term rental, just slightly different team, but similar formulas.
Yeah, completely, completely. And really also wanted to ask as well, how are you able to utilize hard money to be able to scale your business, right? Because I think a big question that people have, especially because we're kind of facing, this unknown time, right? We don't know what the economy is going to do, the US dollar, the price of materials. People aren't certain, what the future has in store, but people do know they're looking to scale, right? And to kind
Mm-hmm.
of scale, where they are and be able to make it big. How do you think that hard money can help people scale up their real estate business?
Yeah, I mean the key word is leverage. Like you utilize that and you spread it across. Like I personally, I have a lot of clients that I have guys that I work with first time. I have no problem with that. Obviously, I have guys that have one or two properties, and I also have guys that have 80, 100, 120 properties, right? And they all utilize leverage for the most part. 95% of them do. They utilize leverage. So leverage is in a nutshell is like, you're putting 20% down, 25% down on a property. Let's say just for easy math, right? So you had $100,000, easy math, $100,000. You're buying, I don't know, you want to buy four properties, right? Uh, really like three once you add in reserves and whatnot. But nonetheless, you put X amount down per property and you spread your money out. You're utilizing hard money to lend on each property, right? And then you're making X dollar amount on the back end after you sell or refinance from that property via, straight sale or via the BRRRR method. So you can really utilize hard money by it's helping you leverage and scale up quicker versus pouring all your money into one project. And then now all your eggs are also literally in one basket, which they always tell you not to do that. But it just gives you the ability to hedge as well. So to your point, with depending on which market you're in, some markets get hit harder than others. And shoot, if you're in Florida now, you just had a hurricane, so it just gives you that extra leverage to really help you scale up even quicker than you probably initially thought you could.
Yeah, completely. And you made a great point there about not putting all your eggs in one basket, right? Because I mean, if you're, let's say you have, whatever it is, whatever dollar amount of cash, and you're sinking all of that money into your project, you're not going to recoup the money until you finish and you sell, right?
Yeah, and then you run into the oh dang, I saw that deal. It's a really good deal. I wish I could get that deal, but all my money's tied up. And then like I'll do mid construction, cash out refinance, and then control fund the remaining rehab portion of it, right? So you can recoup a little bit, but you're still not recouping enough money, more than likely, not recouping enough money to go buy that initial property than if you would have just set on that extra little bit. And you don't want to spread yourself too thin, man. Like nobody wants to just sit on the next monthly payment every single month either. So I don't know. I think that's the best way to put it.
Yeah, no, that's a great way to put it too. It's kind of it's a funny dance between the two, right? You're kind of looking to strike that middle ground.
Yeah, and it's not always about the next shiny object, right? But it's like once you're almost done, my rule of thumb, especially when people first starting out, is like, look, I have no problem with you running multiple projects at a time, but once you get your first one done, at least get it to the point that if you are going to sell, at least get it to basically the appliances or the cosmetic stage, just minor paint. So you're pretty much like 30 days out from listing. And then assuming you have enough capital, then start looking around for other properties because by then you're just waiting for it to sell at that point. You're pretty much past all the like the unknown of that flip.
Yeah, completely, completely, completely get you there. And I'm curious as well. I know that you talked a lot about strategy and kind of the mindset. Great job explaining hard money. If you wouldn't mind, could you also describe maybe some of the loan products that you offer and how it can help investors get their deals done?
So I offer a couple of different products. So we do fix and flips, right? Or we do straight bridge loans, which are basically fix and flip without the rehab component. I do DSCR, which is like a debt service coverage ratio. Basically, it's a rental loan. 5 year, 7 year arm, or a 30-year fix on those. I do ground up construction. I do a lot of portfolios as well. Uh, yeah, that's all of them actually.
Okay.
But they all kind of play off of each other. You could a burn method. You could use one product you can bridge and rehab, right? Value added, then refinance that onto your long-term deal. You can go build a house through the same method, right? They all play into each other. Or if once you get to scale, you want to do a portfolio, pull X amount of cash out of everything instead of over leveraging on one property. You want to pull out a X amount of cash total, and you want to put a small lien on across multiple properties. We could do those as well.
Okay, solid. So, I guess with the flip product, that's pretty self-explanatory. I'm assuming you guys would help with the purchase. And, one thing that people always say is, I don't know if it's kind of a buzzword or some sort of marketing thing, but they always say, do you give 100% financing? What would you say to someone who's looking for quote unquote 100%?
I come from the institutional space originally. I was in institutional private money space for 4 out of the 6 years I've been in this space. Um, I don't know anybody who's done 100% financing on a personal side or on a business side. I know they're out there. I've heard the stories of that. But if you are going to do that, I feel like in a personal side, if you're going to get mentored by somebody, on that said flip, right? And if you are getting 100% financing, I personal opinion, I feel like that capital should be raised within your inner circle. Then because everything comes with a price, like if you met this stranger that you've never met and they're willing to give you 100%, like what else do they really want of that? I mean, some are fine, but like that's the true hard money space that I'm not really a part of. Nothing wrong with it. I don't know. I tend to stay away from that because sometimes it is too good to be true. Just my personal opinion.
Yeah, I know, and I appreciate that. And I just thought I'd ask because there's so many, people out there that ask, right? You see it online, I'm looking
Yeah.
for 100%, but I guess, when you're a little kid, kind of that saying, if it's too good to be true, it probably is.
Yeah, or what happens like, okay, so, generally speaking, right? And I get it. When you're first starting out, the hardest part is getting that down payment, is getting that first property because this is a barrier to entry industry. I'm fully aware of that. And as you get into these more working with more and more experienced guys, a lot of these guys don't really exceed 70% max, 75% max in their leverage because they want to hedge. Because I mean, look, if you take this year, for example, since it's all over the news, if you were to buy a property, let's just say 8 months on a 12-month note at 8 months ago at 100% financing to take, say, $200,000 property, then now you might not be able to sell that property for 200 because people aren't really buying as much, relatively speaking, from a general homeowner side for qualification purposes. Now 200 you might still be okay, but as you get into a little bit higher dollar amounts, you're underwater, and then that investor that they want their money back and you can't sell it. And then you guys have like an internal issue that you guys have to deal with. Just in the stories that I've heard, yeah, that of the true 100%
Mm.
financing at 15% interest rate. And you probably didn't calculate your carrying costs because you're paying 100% of that note at 15%. So when you try to sell it and you're probably getting at least 50-50 split, you really didn't really make any money when you
Mm.
pencil it all out.
Yeah, and that's a great point to make as well. And if you wouldn't mind explaining, what exactly are carrying costs and how can you make sure that you calculate those correctly?
Yeah. So, and in the simplest term, carrying costs are basically what your monthly payment is. So if you have a 12-month term at $1,000 a month payment, if you hold it for the full term of the note, you're paying about 12 grand for the year. But if you anticipate getting out of this project in, I don't know, 90 days, just as an example, your first payment starts about, the following month after closing. So we're at the tail end of October now, at the time of this filming. But let's say we close the deal this month. First payment starts December, January, February. It sells in March. It's 3 grand and some change. That was your carrying cost, not including your closing costs, right? So your net um, profit needs to at least exceed your closing costs plus X amount more. So just factor in how long it's actually going to take you to get the deal done, then add an extra 2 months to it because you never know, and then factor that into your overall net profit. And 9 times out of 10, you'll be good. And sorry, not to add on. I always underwrite deals because I pre-underwrite everything as well. So I always underwrite everything on two-way exit so that if that property doesn't sell, you're able to refinance it as well and qualify for DSCR. So at least you're not stuck. Let's put it that way.
Absolutely. And what you just said, that's also kind of in a way the beauty of hard money, right? Knowing that someone else is in your corner and they're doing those sorts of things as well. They're saying, hey, we have, option A here. And then of course, if you need another exit strategy, maybe you have B, maybe you have C, right? So
Mm-hmm.
it's kind of neat to be able to see when you have someone in your corner like that, they're able to help you explore those sorts of options too.
100%, man. 100%. We want everybody to be successful. And plus when you're successful, you tell your friends want to do it, and then they start building money for their families and it teeters down from there. It's bigger than just like a commission check. It really at least to me, like it really you have the ability to help people out. And as you win as long as they win. So I mean it's a win-win at the end of the day.
Yeah, yeah, completely. And I guess, you kind of answered that in a way already, but maybe to piggyback off that a little bit, could you tell us, what's the most, or I guess you could be in any facet of the business, right? You could do a lot of different things in real estate or construction. What's rewarding about this part of the business for you? What's rewarding about this job?
Honestly, seeing other people fulfill what they intended to fulfill. Like I don't believe anybody gets into this space wanting to fail or lose money. So especially when you're working with people who are just starting out and I'm lack of a better term, kind of holding their hand through the process, right? Just being able to see them actually closing their property, right? They're super happy. Then I always follow up with them to make sure it's still going as they initially plan, and then seeing them sell. Then as soon as you see that work, they're like, let's do it again. Let's do it again. Let's do it again. So just seeing that little light pop on, like to your point of being able to actually do this, right? I think that's the most rewarding feeling, at least in my experience.
Yeah, absolutely. I love to hear that. And I can tell that you're obviously, passionate about what you do. And I'm curious as well, I know you mentioned it briefly, before in the show, but could you tell us, are you lending nationwide or are there particular markets you're looking at or, where are you mostly lending?
Yes, I'm licensed, obviously personally, I'm with the company in about what we got, like 46, 45, 46 states. So pretty much all of them. We don't do Alaska, we don't do the Dakotas, Wyoming. New York is very case by case, like extremely case by case because the laws in New York are if you're not based in New York, it takes like 18 attorneys to do like one deal over there. So like if it's a great deal, great client, we'll look at New York. If it's in like the major metro of New York. Outside of that, the rest of the 45 states are fine. I don't do anything rural. Uh, so as long as even if it's in like Iowa, it's like Des Moines, Iowa, or if it's in pick your state, right? As long as it's in major metro for the most part, we'll look at it.
Okay, solid, absolutely. And I know you gave some great insight before, but maybe if you could give any sort of tip or advice to someone who's looking to utilize hard money to scale their business, what would you tell them to get started?
Are you referring specifically to like a fix and flip or just in general?
Yeah, it could be fix and flip. It could be doing new construction for the first time, something like that.
Um, I would always say just on a personal side, always have reserves, always have a little bit more than you think you need. I mean, real estate is an investment, right? Hard money is your tool to get to that investment, right? And get to that end goal. But just like any investment, you never want to over leverage yourself. So I think that being able to utilize hard money, have a little bit of cushion from a liquidity side. I know everybody's in a rush to get in there because you see the glitz and glamour of people making X amount of dollars in real estate, but what they don't tell you is that there are plenty of people who don't really hit that, and 9 times out of 10 it is due to them just being over leveraged because there's real life as well. I don't know if somebody has kids or there might be an emergency at home, or whatever it is that you need dollars for, and then your project is not going to take precedence over that it is real life, but that immediate family emergency. So I would say stack your money as much as you can, right? Um, Find somebody that actually knows what they're talking about. Obviously yourself, you're well versed in the space. I mean, I've been in it for 6 years, but this is all I've done every day for 6 years, right? So you work with somebody who really knows what they're doing. And you can and ask them questions. Ask more questions than you think. I know sometimes you don't know what you don't know, but ask them to run it like, okay, if I buy it at this, my intended rehab is this, my projected ARV, which is after repair value, is this. Uh, Based on the rents, rest in the gross market rents at this stage in the cycle, I can probably I can project to get X amount of rents. Can you give me like a quick synopsis of like if I can't sell it at this as of right now, assuming credit's still there, can you give me like a rough idea if I can qualify on the back end? So at least I can sleep at night knowing I can have a two-way exit. So in a roundabout way, I would say make sure you vet your people. Don't always go for who has the best terms on paper. Uh, that's the biggest thing. A lot of first-time investors they get at that, maybe they told me 90% and 100%, but they didn't tell you that how hard it is to get a draw on the back end when it's time to actually get reimbursed for the money you've put out for the construction. So just take that extra couple minutes to really vet people out.
Yeah, absolutely. And that's some great advice there. And I guess, more about you, Justin, as well, maybe to kind of bring it home here. Maybe someone's listening there, down here in the state of Texas, Southern
Mhm.
California, another part of the country. What are you looking for? How can our audience, help you?
I mean, I'm running business, man. Like everybody's always looking for additional clientele, right? But like, I'm not really on here or speaking with you to necessarily look for anything specific. I mean, any tips or tricks? Like, I don't know everything. That's the beauty of real estate. Nobody knows everything. There's always something new that somebody doesn't know or wasn't privy to. So just be open, and if you have additional questions, that's my biggest thing. I'm not really looking for too much help, but if anybody is willing to help or wants to add 2 cents or to something I said, or maybe that's all I'm really looking for. More like constructive criticism, to be completely honest.
Yeah, yeah, absolutely. I appreciate that. And Justin, is there anything that you haven't said that you really just like to hit home for us?
um I don't, not off the top of my head. I'm sure this is gonna be one of those things that, like, a couple hours are gonna go by. I'm like, dang, I wish I would have said. um but no, just like I would say this, like really have enough liquidity, get your credit score as high as you can get it, form a great team, and that goes from the front end agent if you're buying through a real estate agent or wholesaler, whomever it may be. Get a good lender, right? Somebody who is reputable. Not saying it, just generally speaking, somebody who's reputable who that they know what they're talking about to an extent, and just know your numbers. Like, don't be afraid to dive into the numbers and really, because this is a system and it's a formula. So really, just make sure that you have everything penciled out, and don't flip a property based on hope that it'll sell for this. Like, put the numbers in, make sure that everything does pencil out, and those are the main things. Those I would say those are the three main things that I see newer investors having issues with. So if you can get those three things down, I think you'll be at a good start.
Absolutely. Get those three things down, y'all. Well, Justin, it's been great, being able to chat with you, learning a bit about, your background, your, experience in the industry, a bit of tips, for people to know, about hard money. Maybe we're wanting to connect with you. We're here in Texas, California, another
Yeah.
part of the country. Where can we find you?
Honestly, man, the quickest way is just call me. I'm very personable. Like text me, call me. I don't know if I can give you my cell phone out now if you want to put in, and obviously we have each other's contact information. However, whatever makes the most sense for you. But I mean, I do have Instagram. It's J Harrison TRT. But the best way, just call me, man. Like I like to be a lot more personal, a lot more hands on, especially in the beginning, and then you get established relationship, and then you just take it from there. But call or text me. That's the best way I can put it.
Yeah, of course. And we'll have your info in the show notes. Justin, I know I've said it before, but it's been a real pleasure, having you on the show and really hearing, a lot of your expertise and insight on the business. So thank you so much for joining us tonight.
Appreciate it, man. Thanks for having me. It's been great.
We'll talk to you later.
All right, have a good one.